In this module, I'm going to talk to you about the ability to increase your credit score. So many people come in and they want to buy a house, and sometimes they think their credit score is real high and it's low. Other times they think it's low and it comes in high and it's great. If you're in a position that you need to increase your score, and that could be you need to increase your score to be able to qualify for a loan. It could be that you need to increase your score so that you can qualify for a better rate and in that sense save money. As I've said throughout these training modules, it's something that can be done and oftentimes 45 to 60 days. Generally speaking, within 9 months to a year, not a problem. A lot of people I know, you want to buy right now. But if you can get there in 9 months, why not? The way I help my clients, when I'm going through coaching and offering you the guidance, we're going to get you the lending pre-qualification or pre-approval done first, right? So in filling out the loan application, we get to pull the credit report. We pull the credit report and we see where you're at. Once I'm looking at the credit report, once I see this snapshot and understand your other finances and debt situation and where you're at, I can make recommendations on how to fast track you to get you that credit score that you want to be able to get the loan. If you're just needing to bump your score to get into the next bracket so that you can have a better rate, oftentimes that's 45 days. We can make that happen. So again, it's important to know that someone's there to help you, to offer the guidance, to get you what you need, that's looking out for your best interests, and to get you to where you want to go, right? We're all here. We want to be there. As a real estate coach, I take it personal. I want you to complete that journey. I want to help you get from where you are to where you want to be. It's what I do, and I take a lot of pleasure in helping people along that path. One of the things that you can't ever get back, and this has to do with life too, time. Steve Jobs died, right? All that money he has, he couldn't buy himself any more time. I don't know that his chemotherapy or treatments or anything like that for his cancer gave him more life because he had the option to be able to get things others couldn't. You know, we don't have the money he had. I don't think it did. He died just like anybody else would. Money can't buy you time, okay? When you're getting into buying a house, you don't want to lose time. If you're thinking, well, I'm going to get married in 6 months, and after we get married, then we're going to go ahead and buy a house. Well, that's great. That's awesome. Start now. Get your lending. Look at it. See what you can qualify for. If a credit problem comes up, fix it. Once you see what you're qualified for, you might still want that dream wedding, but you might not. You might go, you know what we really want to do is own a house. So instead of spending $20,000 on a wedding, we're going to go to Vegas. We're going to spend $1,000 on a wedding because we want to buy a house. But again, time. The sooner you start, the sooner you're going to get there. And it doesn't matter. You still get married in 6 months, and 3 months after that is the plan to buy a house. You can still stay track on that, but you know now. So if anything needs to be corrected, you've got this time to correct it. So in 9 months you can buy. People will wait. Oh, you know, we'll look after we get married. Then we'll talk to a lender. Then we'll do it. Okay, so your plan was to buy 3 months after you got married. You're 6 months into the future, you got married, you say, all right, it's time. We better go ahead and start talking to a lender. And then you find out you need 9 months to straighten your credit up. What happens if you would have started back then, right? Time. You can't get more of it, so start sooner. On the credit. People that go out and they fill out all these things, want a free car, want a free motorcycle. A lot of times you're giving people permission to run your credit, do a soft inquiry, whatever. Maybe you're at Best Buy, and Best Buy has this promotion where you can get a new TV and you have no payments for a year. So you fill out the little application, you say, well, let me see if I qualified. No, unfortunately, you didn't qualify. Well, guess what? That's another inquiry on your credit report. If you're going to buy a house, you really need to watch these inquiries that you're putting on the credit report because they bring your score down. And those are really hard to make go away. So when you're in the mindset that, hey, I'm going to buy a house, even if you're selling one and buying another one, when you're doing this, make sure that you really watch the applications and these things that you're filling out. You don't want those on your credit report. Okay, something else. You got people out there, they've got no credit score. I'm not talking about a low credit score. I'm talking about no credit score. Zero. Zilch. Nada. Nothing. I've helped clients get lending that have absolutely no credit score. None. I use their credit bill, their cable bill. I used a letter from their landlord because they've been paying rent, right? They've been living somewhere. I've used a cell phone bill. I've used utility bills. You go through when you take these things and establish a means of credit. There are loan programs that people with no credit score can go through. It's called non-traditional credit and get a loan. So I've told you through many of these modules I've mentioned, don't give up. Keep looking. When there's a will, there's a way. When you're stacking your team with the right people, they're going to help you get to where you want to be. Not a lot of people know about using non-traditional credit. Yes, you can. You can get it done. All right. When we talked about this too, when you're looking at your score and you're thinking, okay, well, it's not a big deal. I'm not going to buy something right now. It doesn't matter. It does matter. Your vehicle insurance is affected by your credit score. Your homeowner's insurance, if you own a house, is affected by your credit score. I don't know all the things that are affected by the credit score. I'll bet it's a lot. So the better your credit score is, the better off you're going to be financially because you're getting a break. Let's take a car. So you could have the same car. It's on sale for $25,000. Buyer A has a 720 FICO. Buyer B has a 620 FICO. Buyer A gets a 2% loan. Buyer B gets a 16% loan as a rate. So when it's all said and done, buyer A might pay $28,000 for that car. When it's all said and done, at the end of the 5 years, buyer B might pay $33,000 for that same car. $5,000, $6,000, $7,000 more because their credit score wasn't as good as buyer A for the same car. So pay attention to your credit score. If it's not up to snuff, if it's not where you need to be, when you're going through the home loan process, and all you have to do is ask to join my coaching program, and I'll do everything I can to help get you there. I'm not going to pay your bills, though. Don't expect to get out of that easy. All right, we'll see you in the next module.